When markets crash, most people panic. They sell everything. They freeze, watch their savings evaporate overnight. But a tiny group, the same names that appear again and again throughout economic history, don't run. They wait, they watch, and then they strike. While the world burns, they quietly make the kind of money that can change family trees for generations. The paradox is simple. How is it possible that every financial collapse destroys millions, yet somehow produces billionaires? Today we uncover the playbook the wealthy use when the world is falling apart. Every major crash follows a rhythm. The Great Depression, the dot-com bubble, 2008, 2020 pandemic crash, they all wiped out trillions of dollars. But here's a shocking fact. 40% of the wealthiest Americans today either built or multiplied their wealth during a crisis. To understand why, imagine a forest fire. To most creatures, it's destruction. To others, like the seeds that only germinate in flames, it's opportunity. Crashes don't just destroy, they reset. They clear the board. They transfer wealth from the panicked to the prepared. So how do the rich turn disaster into profit? Here's the system explained simply. 1. Panic creates discounts when people rush to sell. Prices collapse. Stocks, real estate, entire companies fall to 30%, 50%, even 80% of their real value. To the wealthy, it's not a crash, it's a clearance sale. 2. Cash becomes a weapon. While most people stretch every dollar, the wealthy hold cash or credit lines waiting for the moment when fear peaks. When everyone else is broke, the ones with cash become kings. 3. Buying what others are forced to sell, margin calls, business closures, panic selling. These force assets into the market at fire sale prices. The rich don't buy more, they buy better. Entire apartment buildings, distressed companies, blue chip stocks, they collect them like treasure. 4. Buying influence, not just assets in crashes. The wealthy don't just accumulate investments, they accumulate power, board seats, ownership stakes, influence over industries that survive and reshape the economy. 5. Riding the recovery. History shows this pattern clearly. Markets always eventually recover. Those who bought at the bottom don't just get rich, they get filthy rich. Now picture the turning point. Prices fall, fear peaks. Everything looks hopeless. This is the moment ordinary people retreat, and the wealthy, they move billions. In 2008, Warren Buffett invested when no one else dared. During the pandemic, private equity firms bought everything from hotels to media companies. In every crash, the wealthy sense a moment that feels like the end of the world, but is actually the beginning of the transfer. The turning point isn't the crash. It's the silence right after. When the crowd stops screaming, the rich begin shopping. 1. Wealth concentration intensifies after every crash. Inequality spikes because the rich own assets, and assets rebound faster than wages. 2. The middle class shrinks when savings vanish. People miss the recovery. By the time they re-enter the market, prices are already high again. 3. Companies change hands, small businesses collapse. Large investors buy them for pennies. Ownership shifts upward. 4. Governments step in, but usually too late. Stimulus packages, bailouts, interest rate cuts, these often inflate markets again, further enriching those who bought at the bottom. 5. A new financial order emerges. Every crash rearranges power. New billionaires rise, old institutions fall. The world changes shape, and money quietly moves upward. But here's the modern twist. This isn't just history, it's happening right now. Global debt is at record highs. Housing affordability is collapsing. Inflation is eating savings. And analysts warn that the next crash could be the biggest wealth transfer of the century. The question is no longer if the system will break, but who will be ready when it does. Here's the uncomfortable truth. Crashes don't make the rich richer. Behavior does. They prepare when others relax. They act when others panic. They buy when everyone else runs away. In every crisis, the same pattern repeats. But the pattern isn't the problem. The problem is that most people don't even realize the game is happening.